Hi, and welcome to this edition of The Insurance Expert. I'm Marc Glickman, long-term care insurance expert nationally. I'm an actuary by background, but I have the pleasure with me today to have Dan Heffernan on the line. Dan's been in the executive carve-out business owner long-term care market for many years. Thanks for joining us and sharing your expertise, Dan.
Thank you for having me.
So, Dan, tell us a little bit more about this opportunity for business owners. How exactly does it work, and why should a business owner be considering it before the end of the fiscal year?
Well, timing is everything. And one of the reasons we look at it in conjunction with fiscal year-end planning is that that's the optimal time for your business to be considering a fringe benefit just for the business owner or select people in the organization, because it provides you the ability to get the float on Uncle Sam, and you always know good timing for you to be paying a premium.
I see. And how does the business owner tax advantage work exactly?
Well, it all started, got to give you the genesis of it. This isn't a new idea. This has a lot of rust, dust on it. It started in January of '97. When HIPAA became law, it specifically said that you can deduct long-term care premiums in a business setting. The value to that is that we can cover just the business owner. We don't have to cover everyone in the business. And what really, I think, chaps a business owner is, gosh, I got to do it for everybody. This is one you can do just for yourself. And we don't get any other advantages from Uncle Sam, because Uncle Sam typically tells us they want more from us, not we're going to have an advantage. So the ability to a meaningful, large benefit out of the business that Uncle Sam helped fund is really a real value. Because remember, you're not paying taxes on it. It's a deduction.
Gotcha. So why is a business owner, why does long-term care resonate with them personally usually?
Wow, that's really, I think, the whole question right there. Number one, business owners by profile are the highest functioning people in their family unit. Every time there's a crisis, who do they go to? So you've lived all the experience already with a mother, a father, or in-law. You've already been there. You just didn't know you could do what we're talking about today. And I want to throw this in there and be done with it by the time you quit working. In other words, you don't pay for the rest of your life. You can pay for it and be done with it in 10 years. So while everybody else in the family unit has a reason why they can't pitch in, you're having to do it. I had to do it at 29 years old when my father had Alzheimer's and had to take care of my family. So it is important to recognize that this is a benefit that, and I'm going to make this a little longer than probably I should, but this is mom insurance. You know who this is really for? This is for mom. So she can help give care to dad. And when there's nobody left to take care of her, she knows she'll be taken care of.
I see. So I know you worked recently with a client that was a small business owner. Can you tell us a little bit more about that client and how they designed their plan?
Well, this was a business owner that was 56, which is really within 5 years either way, the optimal age we really look at for business owners. They were a computer consultant, small, been doing it for 20 years, and did not know that he could do this. He's already living the experience with his mother, and it, he can tell me how expensive it is and what do you think it's going to be when we get there? It's going to be really expensive. It doesn't get cheaper, and he didn't know he could take care of this now, and then Uncle Sam would help him pay for it because it's a deductible business expense.
Right. And how much was the deduction worth for him approximately?
For he and his spouse, because it's treated just like health insurance. So you actually get the deduction for the spouse, even if she doesn't work in the business, and the owner employee. So it was about $6,000 in this case. The premium was around $9,000. So Uncle Sam subsidized a large portion of that through the mechanism that they use, just the exact same mechanism that the government uses for health insurance, and it falls into that category.
Right. And probably for $9,000 for the couple, they probably have well over $1 million of long-term care protection when they need it the most.
So think about this. You get this subsidy from Uncle Sam, and you can get $1 million of coverage that'll have probably a true net cost, net after the day is done, of around $4,000 to $5,000.
Right, because the benefits are still tax-free even though you took the deduction on the front end.
Correct.
Oh, very cool. Well, thanks for sharing that story with us, and I'm sure we'll have you on more editions of the Insurance Experts.
Thanks for having me. I always enjoy this.